Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we are going to rip through Twitter, see what people are talking about, look at some charting from other individuals. It's going to pertain to financial, commodities, or wealth building topics. And again, if you need any help with anything, check out the website finding-value.com. So let's dive in. I'm going to give you my financial opinions as we go, and we'll jump right in. Again, it's at fighting_finance if you want to follow me, or you can go to the website if you'd like to join. Happy birthday for 50% off the first month for a coupon code. Here's a relationship. So this is for me, myself. Here's the relationship between gold, TYX, TNX ratio, and commodities to stocks ratios. We're trying to learn the market conditions that these assets trade against each other and when they work and don't work. I think it is possible we go into the stage where gold, silver, platinum, and commodities all go up together, much like last commodities bull market where the curve normalizes. So what I have here is I've got the CRB to S&P 500 ratio from peak to bottom. We were in a disinflationary period, in a recovery phase of real estate that entire time frame. We've basically depleted a lot of our inventory levels of commodities, and we had an inflationary credit expansion, which put everything into a shortage. And we've come up that first move or wave for that ratio, and we've had a pullback recently. If you look at history and you look at this is the gold price, and this is the TYX TNX ratio on the bottom. When you look at these two charts, you can see that they're highly linked together. TYX, whatever the TYX TNX ratio, whatever that does, is what gold does. They're all interconnected. What that means is that inflation and interest rates are all tied together because inflation um, moves these interest rates up and down, and gold moves with that inflation. Last commodity bull market, we bottomed in 1998, which is off this chart on the left-hand side. But towards the back of the bull market, we could see we had a big move in the CRB index all the way to the peak of 2008. That was the same time frame that we had a curve that was uninverting. It was coming from a low point to a high point. And at some point in this curve, when you go from a low point to a high point, you get a crash. So we had the crash right here in 2008. That's where the ratio peaked, and then we crashed lower the entire time. They tried to reflate, which they did. They reflated, and gold accounts for that with the TYX TNX ratio. So the ratio and the way that this all interacts with each other in the markets, and the way that the interest rates and how that curve moves prices assets. Right now, if you look to the right hand side, gold is starting to break out of a flat period. We had gold break out of a flat period here as well in 2019. It broke out and came all the way up to 2020. Then we had a consolidation period. I think that this time frame that we've got the little short arrow on the right hand side is very similar to time frames back in the early 2000s where that curve, the yield curve, goes up and then it moves on up, this TYX TNX ratio. So I think we're going to see, hopefully, an everything type rally where commodities and maybe even stocks participate in it, and precious metals. Coming down to Bitcoin. So this was back in June 21st of 2023. I said fractal of old pattern compared to new pattern being created today. Beginning of a new uptrend, question mark. What do you think? So this is Bitcoin. And at that time, we were right here at the bottom of that. And I was like, this is a good time to buy. And I think we're going to go much higher. So this is the blue fractal of this move. And I copied this and relayed it over this move here. It's the same fractal. And right now, if you were to look to see where we're at, I gave an update here. We're all the way up here. We've already broken out to the upside, and we're starting to move on up. So the charts are playing out quite well. Oops, hit the wrong button there. Coming on down, we've got Bitcoin there. Gold and silver ratio sitting on top of support. I think this is going to break down. We can look at some other ratios that I posted as well. So we're going to go a little bit lower here. Moving on to Tavi, he says, rarely in history have Brazilian stocks been as cheap as they are today. What if I had told you that a year ago, that the Fed would implement the steepest rate hike cycle in history? Oil would drop by 45% from its recent peak. The commodities equal weighted index would correct by 26%. Lula would assume the presidency. Would you have guessed that Brazilian stocks would have outperformed every developed market since 2022? In fact, Ibovespa continues to beat the S&P 500 year to date despite the AI euphoria. Today's macro and fundamental reasons to own Brazilian equities are exceptional. In my view, this continues to be an incredible long-term buying opportunity, and we're just breaking out of a downtrend line to the upside. So I actually agree with them. I think it's an incredible investment opportunity for these commodity rich emerging markets. Completely agree. Scrolling down, yep, I got that there. It says, not a matter of price. If you don't understand, or I should say, if you understand the energy return on investment and thermodynamics of oil depletion, supply declines regardless of price. That's the difference between economics and physics majors. I know a lot of the business guys, a lot of people failed out of engineering when I was at school, and they all went over to business. The majority of them did because they couldn't make it in engineering. If you understand the thermodynamics, if you understand the physics and all that stuff behind it, there's going to be times where price isn't going to solve your problem. It becomes we'll call it an engineering marvel. Sure, you can maybe substitute, do things in the short term, perhaps, or maybe we can figure out ways to overcome certain things, but um, there might be times where we can't overcome it. Every time in history, it seems like, where humans have populated or overpopulated, we've come to areas where our energy source declines and the population declines almost every time in history. So, will this time be different? I don't know. We'll see. It says those who believe higher prices will provide more oil believe in the false neoclassical economic theory. Coming on down. 128,400 ounces of silver out of the COMEX vaults today. There's an update. Silver is broken out in China. Our target activated up here, which is far higher than where it is today, basically a double. We've got good old Scotty. Scotty does know. Time spent consolidating above breakout area is a very good thing, in my humble opinion. Lots of near perfect back. I call it back tests, not back rests. But yeah, I think we're ready to take off here at any second. It all looks very good in uranium. Here's URNM. A strong bull market is led by equities. Here's URNM. It is breaking on out from a longer term perspective. If you were to take the same fractal move, we would go from 2 up to 4. We've got median U.S. rent is only $24 below the all-time high set in 2022. So here goes rent going on up. We probably have home prices going on up. This could be maybe the next leg. I don't know. We've got shortages of homes, guys, and I think the housing market's going to remain very resilient. If you go look at the home builder stocks, they are all, well, maybe not all, but a lot of them are making 52-week highs. This is XLE versus the SPY. I don't know why he's got XPS there. It says bouncing right off the green trend line. If we get a breakout of that golden flag, energy is the place to be over the S&P 500. Yeah, I agree. We are going to start to rip it in energy across the board. Uranium, oil, nat gas, energy service, on and on and on and on. A lot of the commodity stocks are just going to be ripping. Here's Stefano. He says, breakdown confirmed bullish for silver. This is the gold to silver ratio in the middle here. We hit the 3 peaks here, decline. Another peak. We've got 1 peak, 2 peak. And now we're breaking out of that upward channel there. So we've broken to the downside. We're ready to rip. Silver price is ripping to the upside of its broken downtrend line. And this is probably moving averages, or yeah, this is probably a MACD, and we're starting to break to the downside and go negative. So I think he's dead nuts on of what the things I would look at, and I think we are going to see silver outperform gold. Here's Nostradamus. He says, "Get ready, it's go time." Camco front runs the rest of the uranium sector that will have gains exponentially greater. So what he's saying is, Camco's our leader. It's breaking out. It's ready. It's basically rolling already. The juniors, a lot of them haven't taken off yet. And if you're now's a good time to be looking at them. Get a little bit locked and loaded. That's what I would do, and I would sit in it. Sit in real tight. Tighten up your seatbelt because the ride's going to be coming. And I agree with him. The ride's coming. It says oil is dead. Laugh out. Laughing. Delta posts record quarterly earnings, hikes full year outlook on travel boom, and Delta Airlines is what he's talking about. Get ready for a travel boom, guys. Here we go. Oil is not dead. We are rolling all-time highs, I think, for demand, and they're just going to keep going up and up and up and up. Giant bear flag on the gold-silver ratio. Everyone's looking at this. Some people say it's broken out. Some say we still have to break out. It's a 50-50 mix. That is a bear flag, too, to break lower. The U.S. dollar index could be in a spot of trouble here. So we talk about the DXY. Look at this thing break to the downside, guys. This thing's ready to crash. That's happened where if you look at the previous bull markets in commodities, we've had a falling DXY and other currencies have strengthened against it. We see emerging markets outperform during that time frame, which we saw the Brazilian equity market breaking to the upside. We're seeing all of these ratios that generally behave in a commodity bull market behaving exactly like they did in the early 2000s. Silver outperforming gold, platinum outperforming gold. All of these signals of commodities breaking to the upside. That happens when the DXY declines. We're at that stage right now, and it looks fantastic. Lance says, housing market shortage is so acute and the office glut is so big that Boston will offer 75% tax breaks on office to residential conversions. I agree. Yes, $50 to $100 silver in the near term isn't a stretch. In 79, the silver surplus was at 29 million ounces. In 1980, it jumped to 207 million ounces. Today, there is a 200 million to 400 million ounce deficit. And it's set to widen further with the solar frenzy spreading globally like COVID. I would even say that we could go higher than this, much higher, on a longer time frame. I'm not so concerned about the near term. I'm more concerned about what the total move is going to be over the 2020 decade. And it could even extend into the 2030s, maybe. So SILJ versus silver, we have to still consider the bear flag until negated. So he's got the bear flag here. We've come on down, but we're ripping higher. Now, the thing that gets me a little bit more bullish than, say, some of these guys is I'm bullish because the gold to silver ratio is falling and we've broken the downtrend line in silver. I think the miners are going to come to the upside with that. That's my take. Redfin stock bought almost exactly the same time as the housing market. It took me a few weeks to trust the trend and start talking about how the housing market had turned. I've proven over and over that I'm not a stock trader, but man, this correlation is direct of where this bottomed and how we are moving. Good observation, Mike. Here's gold started this week, a new 2-month cycle. We should take it from June 29 low at 1893 by 17% or to $2,200 USD towards the upper band of a 9-month broadening rising wedge. Previous 2 cycles approximately lasted 2 months and yielded 13% and 15% gains. So he's saying that maybe we get up to about 2,200 in this next pull higher. Yeah, we'll see. Uranium miners says we are go for launch. Says Uselink. Grady, that's very clear and clean silver chart. Higher high today, trying to take on yellow resistance level. And we're basically slicing through it today. Another one, silver looks ready to break through its decade-long resistance this month. That is likely to coincide with gold prices making new highs, proving once again the triple top formations rarely work. Existing times ahead for the overall precious metals industry, which has been starved for capital for so long, one thing is true. If this is indeed the onset of a new gold cycle, none of us own enough silver. And here we go, silver ready to bust out here, guys. I'm a huge silver bull. I think I own enough silver. I'm actually like out of storage for silver, um, and I bought at a very good time. Let's say it that way. SLV, here we go again. Silver approaching blast off, the mother of all cup and handles. So this is on a yearly candlestick basis. Remember, the yearly candlestick basis, what we want to break out of is $31 to $32 an ounce. That is the line in the sand for this, the mother of all blast offs of cup and handles. Silver is looking fantastic. And yes, I'm still very bullish platinum. I'm just looking at a lot of silver charts because that's what people are posting about. So that's what I've got for today, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. We do have a discount going on called Happy Birthday. My birthday's coming up, so love for you to join. It's a 50% discount for the first month, and then normal pricing after that first month. We have a question and answer session coming at 5 p.m. Mountain Standard Time on Sunday. Love to see you there. We're going to talk about a bunch of things that you guys want to hear. I may even go into some things and kind of reiterate kind of what we've learned and how to pick some of these companies, gain some of the confidence that's needed. But right now, since we've kind of breaking out of everything, it's more about what companies, strategy, portfolio, position sizing, and all that stuff. I can give you my opinions of what I'm doing. You guys can do whatever you want with it. But that's what we'll be talking about is companies and position sizing strategies. And every strategy is not going to work for every person, but I can give you options that you guys can choose from different companies of dividend paying versus more speculative versus what companies will have more leverage to this potential move, in my opinion, and maybe some that are in the sweet spot of good growth, good dividend paying, and good sectors that could really move. But that's what I've got for today, guys. That's it. We'll catch you next time. This is Finding Value.